So Howden Africa designs, manufactures and markets specialised air and gas solutions.
Yeah, so what we're talking about here are big industrial fans that are used to blow air underground, process control equipment, heat exchangers. This is in power stations, that kind of thing, as well as environmental control machineries that takes like dust out of flues and all that sort of stuff.
Market cap 1.6 billion rand, PE ratio of 6.8, currently not paying dividends. And this is a trend we're starting to see as the discussion unfolds on each of these stocks, the lack of dividends.
Yeah, so this has been a classic value trap, the stock. I think some parts of the market have been excited. You heard that very low PE. They've got a lot of their market cap in cash. So I guess on paper it looks interesting, but again, very soft environment. They reported results to June. They were disappointing. EBIT was down around 30%. And again, they were saying all the sectors that they service, the power generation sector, mining sector, industrial sector, demand significantly down, revenue significantly down, profit significantly down. Not very exciting.
It doesn't sound like a very exciting story.
Yeah, because two things happened here. Obviously, during the time when Medupi and Kusile and all those projects were coming online, it looked very good. Remember, something like 55% of the shares here belong to the global Howden Group, which is, I think, now part of Carrier or one of those international industrial concerns. But apart from the downturn in activity and the lower commitments to future spending, they also had a bit of a disaster where they were accused of having paid too much by way of a special dividend or a consulting fee or a management arrangement with the global parent company, which got them into a bit of a fight. There were some critical shareholders, there was a bit of backtracking. They've upgraded their investor relations activity. Thomas Barwald's been like working to get everybody in for meetings. So I don't know. It was a very nice run while it lasted, and since then there have been a lot of grumpy shareholders.
You're not holding your breath, considering you've just called it a value trap. I mean, you're not holding your breath for better times.
No, no. So I think that's what you see. You know, as I said, it looks good on paper, but the underlying business is going to struggle in this environment. Again, they were very downbeat about the near-term outlook. So notwithstanding what looks sort of very cheap, as earnings are eroded, it's not as cheap as it once was, and the issue with the parent company, the cash is not coming out of this business anytime soon other than through payments to the parent company. So I don't think you want to be a minority shareholder at this point in time.
Hot or not, Paul?
I'm going to go with not hot now. The market doesn't like it, and like I said earlier, you need other people to like the share before you can like it before they do. Yeah.
Give it a definitive
not hot.